Why are you always asking an investor to fund 100%? How much money are you putting in the deal? I can talk to you about our own organization. We fund every single deal that we take to an investor. We have our own money in the deal, which is why when it comes to cap rates, we're at a better leveraging point because our own money is in there. But I agree with what David said. I think it's going to be in the 9s to 10s, and it's going to be dictated by the inability for people that are going to be able to refinance.
Carlos?
Yes, 9 to 10s. The tendency is going up and up. Even some A's in multifamily, right? There's one A that some properties we're seeing even up getting close to 7 now, which is things are changing a lot. Even for our exit strategy, if we can say that's going to be one, selling something 5 to 7 years from now, we even look in selling our properties anywhere between 9 to 10 cap are for sale. So that tells how conservative we're trying to be. I agree with you all.
Where you're getting your capital, debt, and equity, and not specifically, but generally, and what kind of leverage you're looking at and anticipating as you make these deals, and then as Carlos was saying, what's your investment horizon? How quick are you looking to get in and get out? 1 year, 2 years, 5 years, 10 years?
We're clearly in a time where credit is hard to come by. And I was talking with some folks earlier about when I started buying from the RTC in the early 90s. And this time reminds me of that, when deals that I thought were very good deals and very good transactions, you'd go to 20 banks, and you were lucky if 3 of them would talk to you and 1 of them would actually quote it. And then that got traded back 2 or 3 times by the time of closing. And we're in that environment where banks are being awfully tough. They're scrutinizing the borrowers very closely. So the question is about what we're doing. We have bank lines and we have the ability to do that. And fortunately, we still have a few bankers that are calling on us and asking us to do deals. Leverage is today top side from what I'm seeing, 65%, and an awful lot of banks would like to do it at less than that. But there's certainly money out there, and again, I hear from a lot of folks who say, well, there is no money, I can't get any money. There is money out there. It does require a couple things. It requires a good asset that the bank buys into the story, and a good, well-capitalized developer who's got background and history in handling that kind of asset, and then there's money there. With regard to the equity, we're using our own funds.
And how long are you going to hang on to these fine properties?
That will also, we talked about that a little earlier, Review and I talked about that, and when I bought in the time period from 90, I bought older assets from the RTC, and I bought up stuff from 92 on with the expectation that I'd sell everything within no more than 3 to 4 years. The truth is I bought it from 92, 93 through 01, and I sold it from 02 to 07. So for those who I would caution that when you're ready to start buying, it's great if you think you can sit, and I did a couple where you can move them in 18 to 36 months, but I held a bunch of assets for 7 to 10 years, or even in a couple of cases a little bit more than that. Now the returns were appropriately commensurate with that. When I was buying apartments at $4,000, $5,000, $6,000, $7,000 a door, and selling them 8, 10 years later for $35,000 a door makes it worthwhile to hold on.
I'm a lawyer, but I think that math works. All right, Nozer, what do you think?
In which we are, I think this is a liquidity crisis, but this is a confidence crisis in which we are faced today. I go back to what Professor Hunt put up there. The credit crunch that we have in the market today, it's going to cause a big value crunch going forward. It is. I mean, anybody that thinks it's not going to happen is smoking something. I mean, it's going to happen. We have to face it. The bank leverage, when we started buying properties 3, 4, 5 years ago, the banks would approach us and say, we're willing to give you 80%, 85% if you can raise 15 to 20%. we do a lot of business on gut feel and intuition as entrepreneurs, and we said, you know what, we'll raise 30% equity. We just take 70% from you. And I think we were smart at that time to do that, though all the investors told us we were stupid. But today, I think we benefited from doing that. So we get our money from investors. We work with investor pools. We have excellent banking relationships. I can really proudly tell you that. Not because I have most of the bankers in the room, but we've really had good relationships with bankers. I think one of the things that makes a difference in banking, equity, debt relationship is every quarter, if not 4 times a year, at least 3 times a year, we sit down with every banker and we talk to them about what's going on. We're very open, we're very transparent, and I think that really helps. I think personally going forward, our focus is going to be, we're going to hold on as much as we can hold on to. Investors are with us. You always find a few bad apples that want to buy and sell now. But we're going to hold on. We're going to wait for the market to bounce back. We have the holding power. And as long as the banks work with us, we've had some tough times in the sense that banks are looking for, if you want your loan renewal, pay me 20% down, pay me 15% off, get it off my books. And we're working with those banks. We're trying to show them how we can benefit together if we hold on to property. So that's our game right now.
Carlos?
0.35 plus for us to be conservative. In terms of the debt has changed a lot. The last 6 months, although we closed more projects than to now, to today, we see more changes, not the same access to capital as we used to have before. The main concern that we're seeing now, the lenders are, who is going to be behind the operation? Tell me that who is behind the operation, they know what they're going to do. Of course, it's going to be recourse, everything, but show me that they know what they're going to do in their track record. That's something that we were able to. I was able to show deals that we have closed. We did the repositioning and we refinanced. In terms of the investment itself, many times we put our own funds and we have our investors put funds with us. And something that's also very, very important to us is the location where we're buying the properties. Since our focus is always Bs and C types, we need to buy properties in very busy locations. I need to see strong retail. I'm not going to reinvent the area. I'm not going to go to war zones. That's something very, very important. Finally, in terms of buying, everything that we bought in the last almost 2 years, it's always below 15 per unit. We're buying now properties in the 7s, 5 per doors. So it gives us the safety of holding for a little bit longer.
Okay, I'm going to ask one last question, and if anyone have questions, write down your questions we'll ask. And that is, what product types interest you, and why is that your focus? David?
I probably like multifamily the best because household formation is going to tick up pretty strongly over the next few years. So that'd be the one where I'd look at. The other one, as a contrarian, I'd be a land player because I think land is going to be absolutely the hardest hit. And when we talk about land, there's not going to be a lot of sales. So I like areas where I'm the only prospective purchaser. Land is going to be tough to move because it'll be the last thing to come back, because who's going to need land if you've got empty shopping centers, empty office buildings, apartment projects with 2 and 3 months given away right now? Who's going to buy land? So I think you're going to be able to buy land at tremendous discounts. I also want to return very quickly to cap rates, because when we talk about cap rates, it's important to understand, so what are you buying and what are cap rates? Harry Huff and I were talking earlier, when you talk about what things are trading on cap rates, who's calculating and how are you calculating? So I was a seller a few years back of C multifamily product.